Are we about to head into a housing market crash, and is the market already showing signs of what's going to come in the months ahead? What's up, guys? It's James Allen, the Out-of-State Investor, and in today's video, we're going to take a look at the current state of the housing market and whether or not it looks like we're heading for a housing market crash in 2021. Now, for those of you who follow my channel, I provide updates on this topic every month so that you can make informed decisions, whether you're looking to buy a house, sell a house, or maybe even purchase an investment property. So before I break this down, go ahead and smash that like button. And if this is your first time visiting the channel, I buy rental properties and flip houses outside of my state, and I teach you how you can invest in real estate to build massive wealth in addition to upping your personal finance situation. So if any of that sounds interesting to you, then definitely subscribe, hit that notification bell, and with that said, let's get started. Right now, we're living in very uncertain times where companies have been laying off employees, yet the housing market has been booming, almost like there isn't even a pandemic going on. So the question is, can this housing market keep going higher, or is this just a matter of a massive bubble getting ready to pop? Well, in order to answer that, we really need to look at the whole picture, and there's no better place to start than looking at our current levels of inventory, because supply and demand have a direct correlation to which direction housing prices will go. With that said, based on the latest data we have, the amount of supply is currently sitting at 8.8 weeks nationwide. Now, this is about the same level as at last month, so from a nationwide standpoint, supply is still really low. Remember that a balanced market is 4 to 6 months, so at 8.8 weeks, you're at less than 2 months of supply, which is a really strong seller's market. Now, we also want to take a look at some of the local markets, because housing market crashes don't always happen on a nationwide level. Many times it's on a market by market basis, so local statistics are just as important to consider, if not even more so. The Los Angeles market is sitting at 10.8 weeks of supply, which is still a strong seller's market, and it's slightly lower than last month as well. The Phoenix market is red hot right now, sitting at about 6.4 weeks of inventory. This is trending even lower than last month, which is pretty amazing considering we're now in December when things usually start to slow down. Seattle and Denver are on fire right now. They're also trending slightly lower than last month, sitting on an extremely low level of inventory of 4.3 weeks for Seattle and 3.9 weeks of inventory for Denver. The next thing I want to look at is the volume of sales. It's very common to see the amount of home sales go down in the wintertime, and you can actually see proof of this if you look at the graph over the last few years. Well, as of about 2 weeks ago, the amount of home sales started to go down. Now, this might sound alarming, but it's to be expected at this time of year. And to put it in perspective, home sales are still up 18% year over year. So as long as inventory stays low, I would not be too alarmed with the lower amount of sales, especially at this time of year. Now, on a similar note, pending sales are following the same trend, seeing a bit of a dip as we head into the winter time. But they're still up by over 31% year over year. So nothing to be alarmed at when it comes to pending sales. Another thing to note is just how fast some of these homes are coming off the market. Almost 39% of homes are going into escrow in 2 weeks or less, which is 12.5% higher than it was at the same time last year. This goes to show just how hot this market really is right now. Now, taking a look at the median sales price in the US, we're currently sitting at $323,000, which is the highest it's ever been. And considering the supply is near all-time lows in many markets, I would not be surprised to see more price growth over this next year. But with that said, I really believe this is going to be market specific. In other words, just because the national statistics are showing us promise for continued price growth, some markets are not going to experience the same kind of growth. For instance, taking a look at some of the markets, you can see that San Francisco is taking a bit of a price decline since June. Los Angeles and New York have been sitting at around the same price point since about September. But it seems that the places seeing the most price growth, even through the wintertime, are the markets that people are migrating to. Places like Boise, Idaho. Take a look at how Boise continues to shoot to new all-time highs. Also places like Orlando, Tampa, Phoenix, Austin. It's the states that people are moving to from California and New York. And honestly, in my opinion, these are going to be the type of markets that will see the most price growth in 2021. Now, with that said, days on market is another statistic we want to keep an eye on, because if houses start to sit on the market longer and the number of days on market goes up, then it's only a matter of time until we begin to see a buildup of inventory, which will in turn have a negative effect on housing prices. So where we stand right now is the amount of days on market is sitting at the same area as last month at about 29 days on market. You can actually see on this nationwide graph that since the month of June, the days on market have actually been consistently going down month after month after month, and now at 29 days on market, it's about 17 days less than the same time last year. So once again, this is showing us signs of a strong housing market with no signs of slowing down in the near term. Now let's take a look at one of the most important things to consider during this pandemic, and that is the unemployment rate. Well, once again, we saw the unemployment rate go down from 6.9% to 6.7% this month. This marks the 7th month in a row where we see a decline in unemployment. So that is definitely a good thing to see those numbers continue to go down. In addition to that, the Fed feels confident enough in the economy that they expect unemployment to reach as low as 5% by the end of 2021, which is actually lower than their previous prediction in September of 5.5%. So it seems that even the Fed is starting to gain confidence when it comes to the future outlook of our economy. Now, one of the X factors with this housing market is this looming foreclosure crisis that everyone keeps talking about. Earlier this month, we saw the foreclosure moratorium was extended up until January 31st, 2021 for any mortgages backed by Fannie Mae and Freddie Mac. The moratorium was also extended for any mortgages backed by FHA and has been pushed back for those borrowers to February 28, 2021. But even with foreclosure protection for the near future, when it comes to a longer term outlook, we really need to consider our current mortgage delinquency rate, because eventually the foreclosure protection will go away and we'll have to face the music. The latest information according to Black Knight is we saw a decline in the mortgage delinquency rate for the 6th month in a row. We went down from 6.44% in October to 6.33% in November. This has been a slow and steady decline since our peak in May, where we were as high as 7.8%. So we've definitely made some progress on getting those numbers down. But with that said, we're still 3% higher than our pre-pandemic numbers. So we're still not necessarily in a good place yet. But even so, the trend is going in the right direction, with unemployment going down and the mortgage delinquency rate going down. So overall, it's definitely promising to see that we might be on our road to recovery. And not to mention that homeowners currently have the most home equity ever available to them. So the overwhelming majority of delinquent homeowners, which is about 90% of homeowners, will have enough equity to sell and avoid foreclosure even if the foreclosure moratorium expired. So based on this information, where do I think we stand as we head into 2021? Well, I believe that we will continue to have record-breaking performances in the housing market, at least for the first part of 2021. I also believe that each market will react independently to this pandemic, so it's going to be essential to track what's going on in your own local market to get a true idea of what the future really holds. With that said, for most markets, I'm sticking with my prediction I've had since I started the series back in October, which is that a housing crash, which is defined as a drop of 20% or more, is very unlikely to happen in 2021. You see, if a crash is going to happen, then I think that 2022 or 2023 is going to be way more likely than next year. Even with all this positive momentum going forward, the reality is things can still change really fast, with states being able to implement serious lockdowns and restrictions. So I'll continue to keep you guys updated with the latest on the housing market so that you guys can make the most informed decisions possible. With that said, I hope you guys enjoyed this video. If you feel you gained any value from it, then do me a favor and smash that like button, and definitely subscribe if you want to watch more content like this, or if you want to learn more about real estate investing and upping your own personal finance game. Lastly, follow me on Instagram at the Out of State Investor. Thanks again for watching, and I'll see you on the next one.